Well, it's not that a harder fall is guaranteed, but it's important that we don't get overly excited right now. It's great to see green on the screen after such a rough year last year, where it was one of the top five worst markets in almost 100 years. But despite the good CPI report today, we have to remember there's still a long way to go.
Well, unfortunately, many people, when they're down 50, 70%, say, oh my gosh, I lost a lot of money. Now I have to go back and make it back. And then they start taking more risk. And my answer to them is no, you don't have to act quickly. Very rare in history that everybody has known that a recession is coming. This is the most broadcast and most forecast recession that I've ever seen in my life. And knowing that most people are usually wrong, I would say we're probably not there, depending on where you're talking about. But for instance, China has been closed. Now China is opening up. That's going to give a big boost to the world economy because they are the second largest economy in the world. So I would not be surprised if there is not a recession yet. I expect it certainly to come. David, I'm sure you're a Kidcom. The third year of a presidential cycle in American history has usually been a good year in the American stock market. And this is year 3 coming up. And the reason that happens is politicians try to spend a lot of money preparing for year 4, the next election, so they can get reelected. So I would imagine that things are really better than we read, just because the world doesn't work that way. If everybody knows something, it's usually wrong. They know what to do. They know to spend money. They know who in their constituencies wants a new park or a new school or a new road, and they'll spend it. And they will do that. They always have anyway. These are the guys who know how to buy votes. And I suspect that they will do that. That's not to say that there won't be a recession coming eventually. It's just that I have never seen in my investing career or read about one that was so widely anticipated and so widely forecast. Things probably will go wrong again. You mentioned the 70s. David, we had big inflation in those days, and as you point out, it's worse now. David, in 1980, the interest rate on United States government treasury bills was over 21%. That's not a typo. They had to raise interest rates what would be extremely high now in order to kill inflation. Interest rates are nothing compared to 21% now. So if we're going to solve this problem, we're going to have to face a lot of pain. Do I like it? No, but I have to deal with facts.
Finally, with the latest Consumer Price Index, or CPI, it seems things are about to get better. But can we count on this? According to the latest report, the inflation rate fell again in December to 6.5% on an annual basis. This is a decrease from 7.1% in November and a 9.1% peak in June 2022. A monthly 9.4% decrease in gasoline prices was by far the largest contributor to overall deflation in December, according to the CPI report. While the inflation rate is on the decline, it remains at its highest level since the early 1980s. This pandemic-era inflation peaked at 9.1% in June 2022. However, experts believe that the inflation may not be a concern for much longer. Mark Zandi, the chief economist at Moody's Analytics, has stated that inflation is on its back heels. It's moderating steadily and, at this point, quickly. He also added that I don't think people will be talking about inflation this time next year. It just won't be at the top of their agenda when thinking about their own finances. Jim Rogers thinks the Fed has to keep the rates high. He implies that even though it will be hard on everyone, it's important to do what's needed to bring inflation down. 49% of small business owners believe the US is currently in a recession, and another 9% expect one to happen before the end of the year. These numbers are down from the last quarter's survey. So it seems people still lack confidence in the economy getting better, but there may be some relief. Some experts believe that even if there is a recession, it may not be as severe as previously predicted. University of Michigan economist Justin Wolfers recently stated that it could be a boring recession. Politics may also play a role in economic policies this year, as President Biden will be seeking re-election. Critics argue that confidence in Biden's management of the economy may be unwarranted and that his spending caused inflation to spike. However, other countries also have high inflation rates, indicating that the problem is global. So, what should you do if you're down on your investments? Jim Rogers gives some cautions next.
The stock market's down, what, 19 or 20%?
Something like that.
I mean, I've been around long enough to know that 19 or 20% is not very serious. Wait till it's down 70 or 80%. Wait till you see companies going bankrupt, left, right, and center. So far, this is not fun. Do not get me wrong. This is not fun. But it's certainly not dramatic or even significant in the history of financial markets. Well, unfortunately, many people, when they're down 50, 70%, say, oh my gosh, I lost a lot of money. Now I have to go back and make it back. And then they start taking more risk. And my answer to them is, no, you don't have to act quickly. The best thing you can do is to sit and do nothing for a while, recover, figure out what's going on. Because if you just rush in when you're emotionally wounded after losing a lot of money, you're usually going to make even more mistakes. So my best advice to people at that stage is do nothing, close the window, and just wait, recover, and then wait until you find something that you know is going to be good. Do not get emotional. Now, listen, I make the same mistakes, David. Don't think I don't. The reason I know this happened is because it happens to me. It happens to everybody. And I got very cocky. I began to think I was smart. I began to think I knew what I was doing. I had sold short, and I had actually bought puts and made a lot of money. So I covered my puts on the day the market made the bottom. And so I said, well, I'll wait for the market to rally, and then I'll sell short. And I did. And the market rallied. I sold short. But 3 or 4 months later, I was wiped out. And the reason I was wiped out is because I still did not know a lot about markets. I assumed that people knew what I knew, that most of the companies I shorted went bankrupt in the end. But I lost everything first, David, because I did not know enough about markets. I did not know about trading. I did not know enough how markets reacted and how the public reacted. And so I lost everything. Now, I was very depressed. Don't think this was fun. I guess I could have become a priest or killed myself or who knows what. But I didn't. All I could do was start over, and I did. And somehow or another, I survived. And my best advice to everybody is what I said before. If you lose a lot of money, don't think you have to jump in and make it up again right away. Calm down, wait, recover until you find something that you know will work.
Despite recent optimism that a recession may not be as severe as previously thought, there are still concerns about whether the market has reached its bottom. Julian Emanuel, Senior Managing Director at Evercore ISI, predicts a recession to arrive by mid-2023. Historically, stocks have never bottomed before a recession hits, but there's still a chance the market could rally in 2023 despite the potential for economic pain. Emanuel points to the December jobs report, which showed the US added 223,000 payrolls last month, ahead of economists' expectations. This is a sign that the labour market is still strong, which the Federal Reserve has cited as a reason for keeping interest rates restrictive. Officials have suggested that they will continue raising rates until unemployment reaches 4.7% by the end of 2023. While the outlook for the economy may be uncertain, it's important to keep an eye on key indicators such as the labour market as we move forward. If earnings and employment is still strong, then we certainly haven't reached the bottom yet. Jim gives some advice on what to do next. Let's have a listen.
If I've had success in my life, it's finding things that are depressed. It usually means they're ignored, because if something's ignored, it's usually not expensive. It's usually depressed. And finding change. If I can find something that is cheap, where there's enormous positive change taking place, and I can make an investment, I usually am successful in that investment. It often takes a while. As I told you, my timing is not very good usually, but I have learned to wait and then make an investment. And then, I am lazy, David, because then if you find investments like that, you can own them for 3 years, 5 years, 10 years, 15 years. For me, that's a great way to invest. But as I said, I know people who owning something for 3 days is long term. So there are different kinds of investors in the world.
In conclusion, while the possibility of a recession may not be as severe as previously thought, it's important to keep an eye on key indicators. Be sure to subscribe to our channel and watch other videos for more in-depth analysis on the economy and investment. And as always, thanks for watching.